has to live somewhere before it lands on your doorstep. It lives in a warehouse. And for the past decade, those warehouses have quietly been the single best performing asset class in all of commercial real estate. Now point that trend at Central Florida. The I-4 corridor, 2 deepwater ports, and 1,000 new residents a day. And you have got one of the hottest industrial markets in the country. In the next few minutes, I will show you the subtypes that matter, what really drives demand here, the economics, and exactly what to underwrite before you buy. Let's go. Here is why this matters. While office struggled and retail got reshaped, industrial just kept compounding. The strongest rent growth and the most durable income of any major property type. Why? Because the demand is structural, not a fad. E-commerce, last mile delivery, supply chain reshoring, and relentless population growth all need the same thing: space to store and move goods. And the building itself is simple. No fancy tenant improvements, low landlord upkeep, long leases. So let's break down how to actually invest in it right here in Central Florida. Start with the why. Industrial is not winning because of hype. It is winning because of three forces that are not going away. One, e-commerce and last mile logistics. Every package needs a building near rooftops to get delivered fast. Two, reshoring. Companies are pulling manufacturing back to American soil, and that needs factory and distribution space. Three, people. Florida adds residents faster than almost any state, and every new resident means more goods flowing through us, more warehouses. Stack those together, and you get an asset class with the wind at its back for years to come. Industrial is not one thing, it is three. First, bulk distribution warehouse. Wow, the big boxes, 150,000 square feet and up, tall clear heights, lots of loading docks, leased to logistics giants and third-party shippers. Second, flex and light industrial, smaller multi-tenant buildings, office up front, warehouse, or shop in back, the favorite of contractors, trades, and growing small businesses. Third, and the fastest rising star, IOS, Industrial Outdoor Storage. That is fenced, paved yards for parking trucks, trailers, containers, and equipment. Almost no building, and demand is exploding. Each subtype has its own buyer and its own cap rate, so know which game you are playing. Now, why Central Florida specifically? It comes down to geography. The I-4 corridor, running from Tampa through Orlando out to Daytona, is the logistics spine of the entire state, and you can reach the bulk of Florida's population in a single day's drive from the middle of it. Add the ports: Tampa Bay on the west, Port Canaveral on the east, feeding goods inland. Then layer on the demand engines unique to this region: a tourism economy that has to supply tens of millions of visitors, and a booming Space Coast aerospace cluster pulling in advanced manufacturing. That is why vacancy here has tracked below the state and national averages, and why rents keep climbing. Let's talk money. The economics are what make industrial so attractive. Leases tend to be long, and they are frequently triple net, NNN, meaning the tenant pays the taxes, insurance, and maintenance, so your income is clean and predictable. Capital costs are low, no expensive build-outs like office, no constant retail churn, mostly just dock seals and pavement, and tenants are sticky because relocating a distribution operation is expensive and disruptive. When you underwrite, focus on the real drivers: market rent per square foot, the building's functionality, the strength of the tenant, and how fast you could re-lease the space if it ever went dark. Get those right, and the income is rock solid. Now the risks, because not every warehouse is a good warehouse. The number one killer is functional obsolescence. Modern tenants want 32-foot clear height or more. A building stuck at 24 feet can sit empty whilst newer space leases up around it. So inspect the bones: clear height, the number and type of dock doors, the column spacing, and the truck court depth for trailers to maneuver. Check the power. Manufacturing tenants need serious amperage and three-phase service. Confirm the zoning actually allows the use, especially for IOS. And underwrite the tenant's credit, because single-tenant industrial is only as strong as the company signing the lease. The specs are not details, they are the deal. Let me put one number front and center, 32 feet. That is the clear height institutional tenants expect in modern bulk distribution today. It sounds technical, but it is the difference between a building that leases fast and one that sits. Drop below about 24 feet, and you are at real risk of functional obsolescence. Newer, taller warehouses simply win the tenant. In industrial, the ceiling height can literally make or break your returns. Here is the mistake that burns new industrial buyers: falling in love with the cap rate and ignoring the box. A higher yield often means an older, shorter, or less functional building, low clear height, too few docks, weak power, a shaky tenant, or zoning that will not let the next user do what they need. When that lease rolls, you could be staring at a long, expensive vacancy. So never buy the income in a vacuum. Buy the building, the location, and the tenant, then the cap rate finally means something. Let's lock it in. Industrial is the standout asset class because the demand is structural: e-commerce, reshoring, and population growth. Remember the three subtypes: bulk distribution warehouse, flex and light industrial, and IOS. Central Florida wins on location. The I-4 corridor, the Tampa and Canaveral ports, tourism logistics, and Space Coast aerospace. The economics are clean. Long leases, often NNN, low upkeep, sticky tenants, and never forget: inspect the box. Clear height, dock doors, power, location, and tenant credit are what truly drive the value. If you are ready to put this to work, that is exactly what we do. I am Ryan Solberg with MaxLife Commercial. We help investors find, analyze, and close industrial and warehouse deals across the I-4 corridor in all of Central Florida. Explore current warehouse, flex, and IOS opportunities at maxlifedevelopment.com or call us directly at 321-586-2121. Let's find the building that actually fits your strategy. I will see you in the next one.